Hey there, just wanted to reach out today with a little bit of news. Mortgage rates have dropped back below that 6% threshold, which many people are looking for. That can help lower your monthly payments, but it's also going to bring some new people back out into the market. Your competition could increase and prices could actually tick up a little bit. So the real question really shouldn't be, are the rates lower? It should be, should I buy now or wait? What's going to actually put you in a better buying position? So what actually happens when mortgage rates drop is that you're going to increase your buying power. So for example, if you're looking at a $400,000 home on a 30-year loan with 7% interest, your monthly payment is going to be about $2,129 just for principal and interest, not including any taxes and insurance. If you take that same home at 6% interest, your monthly payment is going to be about $1,918. So that's a $211 monthly difference. For many buyers, that difference could mean whether you qualify or not qualify. The problem that most buyers miss is that when rates fall, more buyers are going to re-enter the market. That means a few different things. You're going to have more competition. There might be more offers on a property. You might have stronger due diligence to contend with. There might be some upward pressure on that price because you have more competition. We saw this happen repeatedly a few years back. If the mortgage rates drop below 6%, you want to consider three different things. You want to look at the inventory where you're shopping. If the inventory stays tight, lower rates are going to push the prices up a little bit faster. You want to take into consideration your timeline. If you plan to stay in the home a long term, small rate swings will matter a little bit less than if you're planning on just being there a few years. And then you want to look at your refinance potential. Many buyers today plan to refinance if the rates drop further. So you want to make sure that you're keeping yourself in a position to be ready to do that if the opportunity comes up. Sometimes waiting on the perfect rate can backfire. So if you wait on a home, prices rise typically about 5% per year. That's going to add about $20,000 to a $400,000 home. That price increase may offset the benefit of waiting for a slightly lower rate. You also want to look at local context. Count on your local realtors that know the area in Wendell and Wake County to help you here. Homes that are in that $350,000 to $450,000 range in Wendell remain one of the more attainable entry points in Wake County. And in many cases, that price is going to see a lot of first-time buyers, move-up buyers competing for similar inventory, which means rate changes can shift activity on a certain property or a certain neighborhood a little quicker. One of the key takeaways here that I really want you to walk away with is that mortgage rates dropping below 6% helps affordability, but it also increases demand. The smarter strategy is focusing on payment comfort for the long-term value and not trying to perfectly time the interest rates. If you're trying to decide whether now or later makes more sense, we can run numbers based on your price range and your payment comfort. We can look at your timeline. We can decide what's the best decision for you because everybody's situation is a little bit different. Give us a call if you want to chat, 919-330-6833.